Is the market lying to you? In the next few minutes, I'm going to show you how to spot the difference between market noise and what the big institutional players are actually doing with their money. Nvidia just posted incredible earnings, the kind that should send the market soaring, but it didn't. In fact, the Nasdaq is heading for a week of losses. This is a huge red flag, and it reveals a critical lesson about where the smart money is secretly moving. Let's start with the big story, Nvidia. Everyone was watching. The results were fantastic, beating all expectations. The logical conclusion? The stock should have shot up, pulling the entire AI and tech sector with it. But the exact opposite happened. The stock barely moved and then fell. The Nasdaq futures dropped. Other tech giants like AMD and Oracle closed lower. This isn't just a small dip, it's a sign of market fatigue. The market is basically saying, we know you're great, Nvidia, but we've already priced that in. We're tired. Here's the hidden detail. A huge chunk of Nvidia's revenue comes from other businesses buying their chips, and many of those businesses have stocks that are not performing well. This is a crack in the AI euphoria narrative. The most important lesson of the week is this: the market's reaction is more important than the news itself. So, what's the actionable advice here? Keep an investment diary. It sounds simple, but it's incredibly powerful. Write down the big news, like Nvidia's report. Note the market sentiment. In this case, euphoria was expected. Then record what actually happened, a sell-off. Doing this consistently trains your brain to see patterns that 99% of investors miss. If you want to learn how to think like a contrarian investor and protect your portfolio, take a second to subscribe to the channel. It's free and helps you stay ahead of the curve. So, if money is getting tired of the big tech narrative, where is it going? It's moving silently. We're seeing an institutional repositioning. That's just a fancy way of saying big investment funds are selling some assets and buying others without making a lot of noise. Look at Walmart and Ross stores. Both companies crushed their earnings reports and raised their forecasts for the future. Why? Because consumers are looking for value. People are spending, but they're being smart about it. This tells you a much more honest story about the economy than the hype around AI stocks. Even Gap raised its forecasts, showing that people are still buying clothes. This isn't a sign of a collapsing consumer. It's a sign of a shifting consumer. On the flip side, look at Bath & Body Works. Their earnings were disappointing. This shows us that you can't just buy any retail stock. You have to be selective. Another example of this silent shift is GE Healthcare. They just bought a medical imaging software company. This is a brilliant move. It pushes them towards a software as a service model, which means more stable, recurring revenue. The market loves that. And later, I'll tell you about another asset that took a hit, creating a potential discount opportunity. We're even seeing money flow into more niche sectors. Take IONQ, a company in the quantum computing space. While everyone is distracted by the drama in big tech, smart money is placing small, early bets on the next big thing. The key is to not try and catch every moving train. You don't need to be in every hot stock. Pick the trains that make sense for your strategy and get on board calmly. Now, let's talk about that asset that got hit, Bitcoin. After a fantastic November, Bitcoin saw a significant price drop. Many people are panicking. I'm not. I still like Bitcoin for the long term. For me, a drop like this isn't a crisis. It's a potential discount. I'm not saying to buy blindly right now, but it's an opportunity to set your buy orders at prices you're comfortable with. This reinforces the lesson. If you believe in an asset for fundamental reasons, a price drop is an opportunity, not a reason to abandon your strategy. Finally, let's look abroad. Japan just announced a massive new stimulus package. This means the government is about to inject a lot of money into its economy. This is a huge signal. It might be a good time to start looking at Japanese companies or ETFs that are positioned to benefit from this internal boost. So let's wrap this up. The market surface is sending confusing signals. The Nvidia reaction was a masterclass in why you must detach from emotion and hype. The real work of a smart investor is to look for the underlying currents, the silent repositioning of institutional money into resilient retailers like Walmart, strategic healthcare plays like GE Healthcare, and future-focused sectors. Be disciplined and be patient. The price always reflects this repositioning eventually. Use this information to build your own thesis. What's one stock you're watching that goes against the popular narrative? Let me know in the comments below, and don't forget to subscribe so you don't miss the next analysis.